Have you been noticing that there's a lot of talk lately about the slowing of the Denver real estate market? I'm seeing a lot of price reductions, or as realtors like to say, price adjustments. And I'm also seeing more offers from home sellers, possibly for rate buy downs or concessions. So there's definitely a shift in the real estate market from a couple of years ago or even last year. But does this mean that we're moving into a buyer's market where the buyers are going to have the upper hand? And what does it mean for buyers since the Fed is meeting in Wyoming this week? And the news outlets are reporting that they expect Powell to announce Fed rate cut today as I post this video for September. We know even though the Fed rate cut doesn't automatically mean that mortgage rates are going to decrease, we do know that mortgage rates tend to trend whatever's happening with the Fed rate. Let's look at the Denver real estate market and get you updated with what's going on. New listings are up 10.6% year over year. And it makes me wonder if we're going to see more new listings if rates stay below the 6.5% that they're at now. What do you think? And pendings or under contracts have been very consistent over the last 3 months, averaging about 3,691 a month. However, they are up 4% from this time last year. Listings sold are down slightly from this time last year, sitting at about 3,600 and dramatically down from what we saw in July of 2020. And we had almost 6,800 closed sales. This is really showing the effect of more inventory, higher home prices, higher interest rates, and the addition of an election year. Speaking of higher home prices, median home price is up 1.7% year over year, slightly under $600,000. Since January, the average sale price on a single-family home up 3.9%, and the median since January is up 2.6%. In spite of what's going on in our market, home prices continue to rise. Again, nice to be a homeowner, but challenging for home buyers. However, buyers are gaining a bigger advantage in this market when you look at the close to original list price ratios. In July, the average discount was 2.9%, up from 1.9% in June, and up from 1.5% in July last year. Interestingly, July's price discounts this year actually close to what we saw in discounts last October. And I'm wondering, with this increase in inventory, price discounts continue to grow this year, especially as we enter into the fall months, which typically will slower in our Denver real estate market anyway. Another sign of a shifting market is the weeks of inventory that we're seeing of homes for sale. In July, we were up 4.4 weeks for a total of 11.6 weeks, which is getting us close to the 3-month mark. And you must compare this to last July when I think we only had 7 weeks of inventory on the market. This increase in inventory now, of course, means that buyers have more choices, and we're seeing sellers offering concessions and negotiating more than they've had to in the previous years in order to get their home sold. Now, remember, a balanced market is usually that 5 to 7 months of inventory on the market. However, with higher prices and higher interest rates, we might be approaching a more balanced market, maybe a little closer to the 4 or 5 month mark versus the 5 to 7 month mark. I don't know. What do you think? When we look at the median days in the market, that's the time that a home is in the market before it goes under contract, we see it's also increased. Now it's up almost double what it was in 2023. However, we still have some fast-selling cities such as Greenwood Village in 9 days, Centennial at 10 days, and Highlands Ranch and Lone Tree at 11 days in the market. And the slowest selling market right now was Aurora at 21 days in the market, and Denver and Castle Rock tied at 19 days on the market. Some other signs that the market is shifting include more contract cancellations, fewer homes selling above the list price, and of course properties spending more time in the market. I read in a recent Denver Post article that experts didn't think that the housing market would go fully into either a balanced market or even a buyer's market, which would be like over 7 months supply of homes for sale. It was noted that buyers right now do have more bargaining power that they've had in a long time, though. And I put the link to the article in the description. Another thought is if the national mortgage rates dip to 6%, the thinking is buyers will come back, and then the concern will be, would there be enough inventory for all those new buyers? So if you're a buyer out there and you've been thinking about making a move, this really might be your time, only because you can negotiate prices, discounts are bigger, and sellers are more willing to negotiate with you versus if you wait until rates do drop, maybe to 6% or even lower, then you'll be back competing again with a lot of other buyers. And those favorable buyer terms may disappear. The sellers will be back with maybe more leverage. Now, all of this, of course, is dependent upon what the top central bank policy makers who descended upon Jackson Hole, Wyoming this week for the U.S. Federal Reserve's annual summer symposium decide. Today, Fed Chair Jerome Powell is expected to deliver the symposium's keynote address, and all the investors are going to be focused on hints and clues from Mr. Powell about a potential September 18th rate cut. Now, remember, the Fed rate cut doesn't automatically mean a mortgage interest cut, but You have to understand that conventional and government-like FHA and VA lenders set their rates based upon the pricing of mortgage-backed securities, which are traded in real time all day in the bond market. This means that rates or loan fees, such as mortgage pricing, move throughout the day, being affected by a variety of the economic or political events. So when mortgage-backed security pricing goes up, mortgage rates tend to go down, and vice versa. Right now we're in wait mode, or perhaps by the time you see this video, you'll already know what the Fed has decided, because they will be a dominant force affecting rates with the release of the keynote address by Fed Chair Powell today. Hi, my name is Peggy Durstoff, a realtor at Live Denver Suburbs, powered by HomeSmart. And if you enjoyed this video, go ahead and check out this video over here where I talk about the changes that went into effect on August 17th due to the NAR settlement and how they can impact you this year if you're buying or selling a home. Thank you so much for watching, and I'll see you on the next video.